And so the thought process there is pay the tax on the money while it's small, going in your 401k as a contribution, and then leave it in there for 10, 20, 30, 40 years. And then when it comes out, it's all going to be tax-free.
Little more good news. Why don't you guys talk a little bit about new defined contribution plan limits and how that might affect people?
I think we got a chart for it to kind of show updates here. With the new limits, the 401k limits and such, what another driver of inflation that has occurred is that with the, as inflation drives up the price of eggs and everything else, it's also going to be driving up the contribution amounts that we're allowed to put into our retirement accounts. And so increases have gone up not only on IRAs, 401ks, Roth IRAs, and the like. Let me look over here. So for example, on last year for your 401ks, the maximum limit was $20,500. It's now gone up about 10%, up to $22,500. It's gone up $2,000. IRAs have gone from 6,000 to 6,500. And so we've seen those bump up a little bit in all cases. And so for any of you that still fund a 401k, fund IRAs, fund Roth IRAs, I urge you just to take a look, log into your account. Most of you probably do it once a year. Check with your HR, log into the website, whatever you've got access to. Go verify if you are able to max out your 401k, that you are still taking advantage of that. And for you, for those that aren't maxing out a 401k, I strongly urge you to recognize and verify if your employer offers you a match of any kind. I hate to say this on a podcast. Figure out a way to get the money and put it in because any type of match, it's 100% free bonus money. Even if your investments just went into cash and money market fund, you still have an annualized 100% return on your investment. So figure out a way to at least max the match. Last point, kind of on the 401ks, I would mention, most people are not aware that if you have a 401k through an employer, in almost every case I've seen, they have a traditional 401k and they also have a Roth 401k. Every person's situation is different based upon taxes and age and everything else like that. But for many opportunities, I think that especially for younger folks, you ought to go into the, speak with us and verify, but then go into your HR, go into your website and look for the little radio button. It's going to be right where you can change your contributions and you can switch from regular 401k to Roth 401k. We could spend a whole podcast talking about the benefits of that. But in essence, I kind of look at it, I had a client once upon a time tell me, who's a farmer, I'd rather pay taxes on the seed than on the harvest. So
one other thing I wanted to mention there too, Jason, was you mentioned contribution limits, and that's just the contribution limits for the plans, but there's also the catch-up provisions that are eligible for people that are over 50. So we saw those go up too. What was the final number on the new for the catch-up? Was it 7,500?
It's 7,500 in,
so 30,000 total. Correct.
Yep. In addition to the
30,000 total for those of you that are over 50. And then obviously we got a bump in the IRA levels that we talked about too on the contributions, but they also have the catch-up provision as well. So,
right.
Like Jason mentioned, so we folks want to put money into a Roth IRA all the time. We hear about Roth IRAs, but the plan limits or the limit on a Roth 401k Roth IRA is $6,500 for somebody under 50, $7,500 for somebody over 50. Mm-hmm. Well, if you have an employer plan that does allow, and like Jason mentioned, most of them do, for Roth contributions into that plan, the limit is $30,000. You can put $30,000 into that after tax that then grows, that particular part grows tax free. So $30,000 a year is a really big number for somebody over 50 that, like Jason mentioned, if their strategy is pay the tax now rather than pay it later, that's a much higher limit than $7,500 in that case.
And for anybody,
the phase out limits too, right?
Yeah,
so Roth contributions, depending on your income level, you may not even be eligible to make contributions to a Roth IRA, but those income limits don't apply to retirement plans as far as 401ks.
Yeah, the only other thing to know on the Roth 401k is that's only for your own personal contributions. So if you do get a match, that's going to go on the company side because the company gets a deduction from it. So you can contribute, like say you're 50 or over, you can contribute $30,000 to a Roth 401k. But let's say you get a company match, well, then that will go in the pre-tax bucket. So you have two different buckets there. but it's
And
still money.
there is a new wrinkle. Maybe we should cover this just in something very specific in a different breakout. But with some legislation that was just passed in December, that for our business owner clients really need to pay attention to some of the plan changes that just came down, because there's talk about allowing for a Roth contribution, which has never been a part of the equation since Roth came out in 1998 or 99
Right.
or whatever it was. So that's going to be something super interesting too.
Yeah, we'll have to follow up on that.